So we've been around for 30 years now. That's the big event. This year is First Associates' 30th anniversary. It's amazing. Tim's back there going like, there's no way you guys. I tell you, 30 years seems short compared to that 2 minutes with Larry was talking about earlier. But we are going to have some events. We're expanding. We're continuing to expand. You know, First Associates was founded in 1986. It was founded to service mobile home loans. Like, we're talking down and dirty, like, you know, subprime, like even deeper than that. Mobile home loans somewhere down in the southeast where most of them are. Nasty stuff, right? I mean, we still have some of them today. We still service. Now, some customers you communicate with via text, some customers you communicate with via like email, and the mobile home loans, you pretty much have to send someone out there to go knock on the door after they get past the dogs. And that's, you know, the nature of that business. We bought the business about 6 years ago. Myself, Larry, our third partner, Scott Sharman, was hiding over there in the corner. Scott, get out of the way. Yeah, he's like our silent partner. Although silent maybe is not the word I would always use to describe him. But the reason we're all here, and what I usually wind up talking about, is just how financial services is the last great frontier. I mean, that's why we're all here. It's one of the few, maybe the last undisrupted industry in the United States. There's so many things that have been done the old way in financial services that are only just now changing. You know, arguably insurance is the only one that's worse than consumer lending. But as we go through this transition from where we were, which is banks being fully integrated silos with all these things happening inside them, from taking deposits to originating a loan, servicing a loan, to, you know, sending it out to the market. And now we've seen, since the recession when the banks didn't come back, the emergence of all these specialized players, all these horizontal players who play that way instead of vertically. It's basically exactly what happened to the computer industry way back, whenever that was, back in the 80s or something like that. We've gone from being IBM to being Intel and Microsoft, which is not a bad place to be. As, you know, an outsourced provider, you know, outsourcing has been a trend that's been going on in this country for 30 to 40 years. The benefits are huge, people love it, it's a variable cost, you get greater expertise because you are a horizontal provider. I mean, certainly we as First Associates have great scale in loan servicing. And matter of fact, we spend every day, all day, and a lot of nights thinking about how to be a better loan servicer. Same for Bryce and Defy, they think about their segment all the time and they get scale, which is something that's very hard to do if you're an integrated provider. Your attention's divided, the resources are divided. Usually it's not quite as good. But the emergence of these horizontal players has really enabled people like, be it, you know, Credit or be it DealStruck or anybody else, to assemble the pieces that they want of the puzzle to say, okay, I'm going to get my customer acquisition here, I'm going to do my origination here, servicing's going to happen here, capital provision's going to happen here, taking it to market's going to happen here, and some of that may be in-house, and some of it may not be in-house. But the ability to make that effective, like, stack of components almost instantly is what is allowing us as a group to take a massive amount of share from the old-fashioned banks, which I really just enjoy the thought of that. It's exciting. It's exciting to be part of an industry which is being turned upside down and becomes much better for consumers and capital markets alike. We're shrinking the distance between the two. We were in a meeting earlier today, I won't say with who obviously, but it was an old line loan originator. Couldn't figure out why anybody would go to Prosper or Lending Club or whoever to get a loan. And he was trying to figure it out, talking about it, he's like, but it's more expensive. And my reply is pretty much 6 clicks, right? He's like, but it doesn't make sense, 6 clicks. The APR is too much, 6 clicks, you know, that's it. I mean, it's the ATMization of our industry. People don't want to talk to you, they don't want to go through your funnel, they just want to get on there, click a couple times and get what they want and be gone. Right? And the cost is reduced because it costs less to have someone get on there and click a couple times. We see it in the servicing industry in a big way. You see all these old line, you know, servicers who may be vertically integrated or may not be vertically integrated. They really, really want to do things the old-fashioned way. You gotta send a letter. You gotta, like, you know, call the consumer on the phone all the time. People don't want to be communicated to like that. They don't want to get their loan originated like that. They don't want to have their loan serviced like that. It's a different world. So anyhow, 30 years, this year we'll have a ribbon cutting ceremony at our place where, Dan, you're invited.
Oh, thanks.
Dan's company is in the same building we're at, so we're going to invite it. Matter of fact, we might cut the ribbon on your space instead of ours. That'll be in March, it'll be really exciting. Invites will go out pretty soon. And we'd love it if you would all come. Thank you.